Happy New Year, everybody. It's been a while since I've been on my channel. I'm going to do an update just on my portfolio. Then in the future, I'm going to do more videos about strategies I plan on using this year. As you can see, my account is valued at $54,762.94. The last part of the year didn't do too good. There's a drawdown of like 20 to 30% right now. I'm waiting for those to bounce back as I'm selling options at the break-even point. And when they bounce back, the options premiums I make will be about 30% on that. But my biggest position is actually a leap option. This is one I bought, not sold, on Western Digital. I bought 37 contracts for $120.23 at an average price of $13.24, or $1,324 per contract, for a total of around $48,000 or so. And right now they're only worth about $42,000. There's been a large drawdown on this, and now it's starting to catch momentum. In fact, this would be a good time to put some money into Western Digital, because I believe that the stock, based on their PE, based on their forward PE ratio of like around 5 or 6, in a technology company that is providing hardware solutions to computers, and the competition at Toshiba recently got caught up in supply chain issues. So right now it's looking like a pretty good buy. So hopefully by the end of this year it'll be around 100, 110, 120, but we'll see. Only time will tell. Nothing substantial until their next earnings, which I believe is second or third week of January. And when those come in, I believe we'll see a price increase to around 70 to 75 as that PE ratio continues to drop. But that's my main position. At one point, the drawdown was 50% on the sleep option, but I did not panic on that. Anyways, we'll go back to my positions. I've got 700 shares of Skillz at right now at 748. And my average cost on this was 10.98. Like I said, these positions have been pretty much destroyed these last couple of months, but they'll bounce back. I'll sell options against them. In fact, that's what I've been doing, just selling options at pretty much the break-even point, $11, go a month out or 2 months out, because as they drop, the premiums get less for that particular strike price, and you have to go further out and give it more time to recover. But yeah, Western Digital is not really a position. That's just big loss, is not really a position. Newegg was another position I had. I purchased it around $16.50 on average, and now it's about $10.22. So you can see the drawdown. 400 shares for options I sell against it for premium. Just waiting for it to bounce back. Going to sell longer term options against it. I have contracts going to expire sometime in January or February. Coinbase, I've sold that position before it dropped. This is just minimal shares of it. Riot was the other big one that dropped. My average cost on Riot was 37. Then Bitcoin has dropped because this stock is highly related to Bitcoin. I have 300 shares, selling premiums against it. Like I said, I'll consider averaging down on that as I get more paychecks, but probably not. I'm probably not going to put any more money into my account until this starts to recover. CEI, another energy company. I have 600 shares. I could sell options against it. Selling the strike price $150. Like I said, I gotta go out to February, March to get any type of real premium coming in. Futu at $43.80. My average cost on that was about $60, so I've got to wait for that to bounce back. Fiverr, I just been buying shares upright. I'm just gonna hold them long term. As they drop, I'll buy more shares. I'm averaging the cost down on that. I think I've paid on average about $125, $130. Airbnb also averaging down. My average cost on that is about $188. Baba, trying to build up to 100 shares to start selling covered calls against it. I think my average is about $130, $135. I think that as these Chinese stocks drop, they're going to hit a low point and they're going to bounce back. And Alibaba is a strong company, and their forward earnings will put them ahead of the curve as long as China, behaves itself. Basically, that's the big issue. There's uncertainty around Chinese stocks, so their valuations are low right now based on their earnings. So this might be an opportunity. You just got to wait out this madness, as I say, and hopefully China will start acting normal again. Jumia, average cost was around 18 there. It dropped. I bought that right before the earnings. Premiums were pretty high, around $2 a share, but as you can see, it dropped to. I'll probably average that down when it hits a low point. I just put Disney as a placeholder. So that's pretty much my portfolio. Just that one huge position in Western Digital, and then I have about $20,000 or so invested in these other stocks I'm selling options against. So one large leap position in Western Digital, and then I'm selling options against all these other little smaller positions, but significant nonetheless, because around $20,000 invested in that, and there's some drawdowns. But once they hit the break-even point, I keep all that premium, and pretty much the stock would have made $0 if I sold it upright. But since I sold premiums against that, I think I'm up to about $6,000. So when it hits the break-even point, I've made $6,000. I could sell at lower strike prices too, and lose some of the premium back and still net. But I'm not going to do that for now. I think I'll just hold these long term. I am using margin, and the margin is costing me about 5 times 12 is $60 for the Robinhood Gold, and then it's at 2.5%. So 20,000 would be 200, 400, about $500. Yeah, $500 to use this margin every year, and pulling in the premiums more than covers that. More than covers that. Like I said, I've already pulled in about $6,000 of premium, but there is about $10,000 or $11,000 drawdown currently on my account just because the positions were crashing. So I've got to wait for them to bounce back up. Once they bounce back up, I keep that $6,000 premium if it gets to the point where I bought it at. So say Skillz, I've maybe made it say I made about $500 of premium at that by selling options when I bought it at 11 and kept selling it as they expired. If it gets back to 11, I still made that $600-700 off that position, and it's gone nowhere. And that's kind of the beauty of selling options, is that even when it goes down and comes back up and it flattens out, you keep that premium, you keep making money, and that's kind of been my strategy. I'm going to keep about $20,000 to sell options, and then I'm going to buy leap options for long-term positions that I use value investing in, that I look at the forward P, I look at the potential sector, I look at, the debt and everything. And that's why I really like Western Digital, is because I believe that their sector in the hard drive and storage space and the cloud space is going to boom for a long term as we use more and more technology, as cameras need more SD cards, as phones need more memory, and its PE ratio is about 12 right now. Its forward PE ratio about 6. Most technology companies are around 20 to 30. So when value investors start catching on, when some of these ridiculously overvalued stocks like Tesla would be an example, even some of the ones I'm investing in here, Fiverr, Airbnb, these growth stocks that are way away from their actual valuation, you're buying for the potential. Well, they might crash just because of the interest rates going up. When the interest rates go up, the money that these companies borrowed becomes more expensive, and their values go down. So they are less valuable for growth because they got to pay back these loans, and there's not enough more. There will be less money left for reinvesting into their own growth, and yeah, that's pretty much where my account is at. There's not too much activity. That's why I haven't been posting. I'm gonna do more research. I'm gonna actually try to put videos out and explain options, explain selling options, explain value investing, PE ratios, how to calculate future valuations, some of the basics from my perspective. I'm no expert, but I understand what, pretty much everyone else is doing. I mean, investing is not that intellectual. It's just about patience and mindset. Right now we're in kind of a downtrend, and that's why selling options is good. The longer the downtrend, the further you have to sell those options out, but you're going to recover that 2.5% use margin and a little bit more. And then as the valuations get closer to your break-even point, selling options become more and more and more and more profitable. So I'm looking at making about 30 to 40% every year selling options. Like I said, from the 20,000 I invested, pulling in about 6,000 already in premiums, and that was in August. So August till now, I pulled in $6,000 of premium on $20,000, and I didn't put that all in once. That was over the course of those 4 or 5 months. So if it comes back to break even, then I've made pretty much, anywhere from 35 to 50% by that time. So I've been tracking it. I've got on a spreadsheet. I'll display that spreadsheet in a future video, but yeah, that's kind of the status of my account right now. So if you're new to this channel, subscribe. You can see me grow my account to hopefully by the end of this year 100,000 plus, depending on how Western Digital does, and eventually $1 million in 3 and 4 years down the line. And kind of I'll lay out the blueprint of how I do it as I do it, or maybe I'll crash and fail. I don't know. We'll see. Only time will tell. But more videos to come this year. Definitely, I'm going to be more on top of it and try to post at least once a week, maybe 3 or 4 times a week. So we'll see going forward. That's it for now.